So here's the 9 biggest trends and predictions for 2022. First trend is the Great Resignation, or actually what I like to call the Great Realisation. I think the Great Resignation takes a very negative spin on it, whereas I think it's actually a really positive thing. And the positive thing is this. I think lots of people are coming to the realization that corporate jobs and corporate careers and working for a company, a large company, small company, whatever, is not working for them. So whereas before, for the last 50 years and even beyond that, we've put the company first and our career first, I think what we've done is we've turned that on the head now, and we're starting to put what's important to ourselves and our lifestyle and our family, first. And then we're sort of going, right, what job fits into that lifestyle? And I think, we're just at the start of this, but I think we're going to start to see more and more of this. Of course, the young, very easy to, adopt that and very easy to pivot into that. Whereas when you're a bit older, you've got kids, houses, mortgages, lifestyles, pensions, all this sort of stuff, it's a little bit harder to just to go, you know what, screw the job, I'm out. So I think that will happen, but I think it'll happen a little bit longer. And I think that's the next 10, 20, 30 years. As automation and technology and crypto, blockchain, all these sort of things start to come into their own. So, there really is, the industrial age, the information age, and now, it's calling it the social, revolution, if you like. There's a lot of change happening, and this Great Resignation or Great Realisation is that we should be putting ourselves first. We shouldn't be a slave to a thing. Now, if you're an employer, hiring people, working or having those businesses, then I think it's really important that you provide something that keeps people, some glue that keeps them into the job, that keeps them passionate, wanting to coming back. It may be more money, but actually I think what most people are realizing that it's not the money that makes them happy. It's the other things. It's the feeling they want to go to work, good work environment, perks, maybe corporate social responsibility type things, whatever that is to make it right. That's what this Great Realisation is about, and I think we're going to see more and more of that. So number 2 is US versus China. It's always been US versus China, East versus West. This conflict, that's been growing and the tension. But the reality is, I don't think either country, or any of their allies can afford to go to a third world war type scenario. And I don't think anyone wants that. And I think if politicians push that, I think they're going to get out. The war machine has had its day, and I think, to be fair, they'll be around for a long time yet. But I think people are starting to realize that that's not the life they want. And I think the change in perspective here is that US and China is not US versus China. It's a competition, not a conflict. So the inevitable outcome is not World War III. Actually, the inevitable outcome is that as consumers, we've got to choose whether we go and buy an American-made or a Chinese-made, or whether our phone, But and it's not even that, it's at every level. Now, will there be this great firewall between, you've got to choose that or that, but you can't be on both? Well, no, I think there's places like Singapore that are capable of straddling both and being of both. And that's why I think if it was a conflict, you'd have to choose. But I think places like Singapore and all these sort of places are saying, don't make me choose. Don't make me choose. At the end of the day, I've got military ties, and alliances with the US and their partners. And I've also got economic and social and deeply ingrained relationships that go back a long time before the US with China. So don't make me choose. And I think that's what will drive this. And I think the competition is the thing. So US and China, whilst there is, the narrative for the news will be conflict, actually it's about competition. It's about two opposing views, and basically making both of them making themselves look good. And I think if you see it that way, then you have a much more positive thing on life. And I think a lot of this stuff is all about up here. It's how you view the world that actually determines the outcomes and how you feel. And I think stress will come if you're constantly thinking we're at conflict on the edge of World War III, or that change is bad and you can't get a grip of what's going on. That's where stress comes. That's not what you want. The Great Realisation is all about de-stressing, about choosing lifestyle over what is perceived as a stressful thing. So number 3 is the Great Reset. Now I got hammered last year when I wrote the video, and I put a video not going down the conspiracy theory route, saying actually, you will own nothing and be happy for it. Yeah. Actually, I think is a great thing. I think we're already seeing this and we're already embracing this. At the end of the day, I have Uber, I have or Grab in Asia, I have Deliveroos and things like this. At the end of the day, I don't have to own it in order to be able to enjoy it. My phone, we've been doing this for phones for years. Phones are $2,000, but actually if you pay that off over 2 years and the company finances it, you get a better phone. Yeah. So we're already seeing a lot of this, you'll own nothing and be happy for it. Now, does that mean as property investors or business owners, it should be actually sitting there going, well, actually, I just won't own anything, I'll sell everything up? No, I think actually there is a lot more choice, there is a lot more lifestyle, there is a lot more benefits in having ownership of certain things like capital appreciating assets, like property. And I think that actually is still a driver and still a motivator as with anything. And I think really, again, this comes down to what is your belief. You can go down the conspiracy theory side of things and say, this is all terrible, and the surveillance state and all these sort of concepts, which are absolutely correct. We are being surveilled a lot more. Yeah. And we are being asked about it. We are, democracy has failed in that, it's allowing people to choose because they're getting less and less choice. But then the alternative is communism. Has that actually survived? Has that actually proven itself? Not really. The problem is that human nature is that powerful people will move up the ranks and they will want more and more power and more control. And I think that's just human nature. That's not democracy or communism or anything like that. And I think that's the reality here. Number 4. So number 4 is again a bit controversial too. People love it, people hate it. Yeah, central governments hate it, but actually young guys now are jumping on this. Blockchain, crypto, NFTs, DeFi, decentralized finance. These concepts are not going away. So the sooner you embrace them and learn about them, the sooner you will move from being a dinosaur in your thinking to actually embracing the opportunity that this presents. Now, I'm not saying go out and buy Bitcoin. I'm not saying get into the tokens and the NFTs and that sort of stuff. That's not what this is about. This is about the trend towards blockchain, decentralized storage of information, transparency, access to it on the blockchain so anyone can see it. So there's no hiding behind a centralized server, but also the control is given out to everybody. I think Zuckerberg has already lost, with Meta, has already lost the metaverse. I think he come far too late, 3, 4, 5, 6, 7, 8, 9, 10 years, who knows how long late. Yeah, he doesn't control it, even though he might like to present that narrative. I think very quickly and already he's starting to realize that it's a lot harder and it's already decentralized. So therefore decentralized goes against, blockchain goes against, and metaverse goes against what it is about, or what it is about now goes against what he's selling. Yeah, so I think we'll start to see that was potentially a failed venture. And let's face it, Facebook is no longer the platform that everyone's on. It went to Instagram, it went, now we're talking about TikTok, as being the place to be, and this goes more than this because this is businesses in general. So blockchain, crypto, big, massive thing, look into it, and start to get to know it. I spent 3 months where I basically did I did a yes day for 3 months. Wherever it took me, I said yes. Trading cards, NFTs, DeFi, wallets, crypto, tokens, all this sort of stuff, staking, things that most people haven't even heard of because they're still listening to the narrative of the government that, it's very dangerous, it's only where criminals are. No, it is where a massive portion of programming time is being applied right now. And that has already started to change the way businesses work and the way the world works. Yeah? And that will become more and more a thing as we go on. Number 5 is technology is deflationary. Technology is impacting every single thing. And this goes back to the crypto, this goes back to the Great Realization. Technology is causing us all to be super connected, hyperconnectivity, 5G, all these sort of things. But the wonderful thing about that is it's deflationary. So even though we're going to talk about in number 7, inflation, the reality is technology is hugely deflationary. Now think about this. Yeah? We used to buy a thing of Microsoft Word and for 79 bucks, and we'd keep it for probably 5 or 6 years. Now we pay a per month fee and they just add features to it each month. Well, maybe not each month, maybe every 3 months or 6 months or 12 months, okay, depending on what it is. But the world has changed, you know? So now there's no value in a piece of software that's 5 years old. Yeah, it's not worth anything because the technology is changing and the things that are adding to it. Yeah, so unless your software, you know, is constantly evolving, you're going to get left behind. And that's the amazing thing. Technology is hugely deflationary, which means that governments can print this money, yeah, to a degree, and they've got this deflationary thing happening. All right, but it's also going to feed into technology through automation, which means that jobs are going to be lost. But then that feeds into the Great Realisation, is that people don't want to work for big companies. You know, it's about the BPO, the outsourcing of things to the Philippines and to India and to Vietnam and all these sort of places. So there's a lot of this sort of stuff going on. Number 6 is the recession, okay? Now this is, you know, the first 5 were big picture type things. Now we're going to get more and more down into the nitty gritty of where things are at and where they're likely to go in 2022. Now, the first 5 absolutely going to have a huge impact in 2022, but they are going to be 10 years, 20 years, 30 years impact things. So 6, 7, 8, 9 is more about this year, 2022. And obviously, you know, I work in Australia, I work in Singapore, I work in the UK, you know, and I've sort of got my, you know, hands in a bit of everything. So when I talk about this, it's a bit to do with those areas mainly. So recession, look, for me, there's a 50-50 chance of recession. We may already be going into the recession. So we're seeing stock market drop, we're seeing crypto drop, we're seeing, you know, that sort of unease about the marketplace. I don't think we're going to go into a huge recession if we do. I think there's still a lot of money sloshing around. I think even if we do, the government's likely to stimulate, which means printing more money, I know, which means more inflation. You know, they're likely to stimulate because it worked so well through the COVID crisis. Now, you'll note that I haven't actually, none of my points today are about COVID, because I think COVID, to a large degree, unless we get another strand that is hugely deadly, I think is largely going to become less and less of a problem for the world. I think the world is going to be opening back up, and those places that don't open back up will suffer and are suffering. So recession for me is a 50-50. You know, specifically in the UK, I think, you know, it's probably less likely than it was because there's huge savings, because businesses are very lean, because there's a lot of things that COVID has created where actually that's good for business. So for me, it's probably, whilst I think it's a 50-50 worldwide in various countries in the US and things like that, I think actually it's probably about 30% chance of a recession in the UK. Inflation is number 7. So inflation is everywhere now. And inflation has been around since they went off the gold standard effectively. And there's no chance of that going back. The governments now are addicted to, you know, free money and printing money. And they've realized just how much they can do that. You know, America leading the way. You know, now, I mean, that their debt is just growing and growing and growing, but they're just literally continuing to print more money. Sure, they're going to roll it back, which may cause the recession. But inflation is here. But as I mentioned, technology is deflationary. That will offset it a bit. But I think the real thing here with the inflation rate going up, and it could be 6%, could be 5%. You know, in the UK, they're saying 2 or 3%, you know, for a year and then drop back down. I think real inflation is a lot more than that. You know, I think we've seen that in our bills and that, but I think the issue is you've got to watch your wages and you've got to see how that affects you. But I think the other thing is businesses will push more and more automation. Yeah. So again, feeding back into number 5, which is the technology side of things. Number 8 is property values. Look, property values for me, you know, they've had growth over the last year because there was so much money pumped in the economy, and that money had to end up somewhere. And where it ended up in is shares, you know, stocks and property. Yeah. So that's starting to taper off now, but I still think there's a good chance of property growth. And I think somewhere between, I reckon about plus 5% is where I'm looking at. And I think part of it is because I think in the areas that aren't going to grow much, they won't, but London will come back in. And that's number 9, is London returns to growth. And if London returns to growth, those house prices make up a higher proportion. So it's more likely to lift the average. So even though I don't think it's going to be a massive year this year, I think it's still going to be a good year. Now, obviously we have a recession. What you could see is a minus 10%, okay? But then what will happen is London will bounce back relatively quickly, And I think that's when, other places will start to bounce back. Now, when I say other places bounce back, I think they're going to be in major cities, the places with the best fundamentals. The places that don't have the best fundamentals will probably drop and sit around there, okay? So if you're sitting in an area where, that's the fundamentals aren't great, then you better have a really good yield on your property and understand that your investment is a yield play, not a capital play. Because I think the capital will be reserved for the cities and the good commuter towns and things like that. So, Great Resignation, US and China, Great Reset, blockchain, crypto, NFTs, DeFi, technology, deflationary, recession, inflation, property values, and London returns to growth. 9 things, trends and predictions that I think you're going to see come to play more and more. And I'll be talking about these a lot more. So, by all means, jump on the channel, subscribe, and obviously we'll keep coming from a property investor and entrepreneur's perspective. So guys, have a great day and live with passion, and we'll see you soon. So guys, if you've got any ideas or questions that you'd like me to do videos on, please just email webinars@gladfish.com, and I'm happy to then record videos. And I'm always looking for content. I'm always looking for content that you guys want. So by all means, put it in the comments as we go through, and more than happy to look at that and then do some research and come back with my take on things. But I think, at the end of the day, this is about, for me, I want to grow the channel. I want to grow the, our presence. So, more feedback you can give me, the better. So I'm always on the comments. I'm always answering that personally. And look forward to chatting soon. Bye.